please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
.25 higher start, 10,425 you may say is the start, and now at 420.
Earning numbers are a must, I would say, and in the sense you have to have, I would say at least high teens earnings growth.
Government being the biggest stakeholder in these companies, they can always have conversation on these lines so that the trust of the consumer, who is the most important person, is maintained.
The equity value is around the same, but the enterprise value of Fortis with the purchase of RSP comes to 11,400 crores.
RBI always thought that you should not be doing a sovereign bond. You unnecessarily expose yourself to the vagaries of the international temperament.
10,402 is where the Nifty is trading at. So it's actually pretty quiet down there.
After a 1,000-point rally on 3 days, 150-point down, I think is par for course really. In the context of, the macro headwinds that we had today, so to be crude, bond yields, selling in large cap banks.
Markets recover in last few hours to end with minor gains. Nifty holds on to the 10,400 level. Sensex gains 60 points. IT and consumption stocks rally.
Oil is on the boil once again. Brent crude oil prices hit 4-year highs as the United States and its allies threaten Syria with airstrikes after an alleged chemical attack by the Assad regime.
Oil marketing companies get pummeled in trade after reports that the government is nudging them to absorb a 1 rupee hike per litre of petrol or diesel. HPCL says it has received no diktat from the centre, but the head of the BJP energy cell says oil companies have been told to pass maximum benefit to consumers.
Bank stocks slide and bond yields rise after the rise in oil prices stoked inflation fears. Sources tell CNBC TV18 that the government is considering a first ever sovereign bond sale in the overseas markets, but government officials say the proposal is not serious and the government discusses hundreds of such things.
Fortis Healthcare gains after Manipal sweetens the offer for Fortis Hospital. Separately, IRB Infra closes over 10% in the green for the second straight day. Mahanagar Gas takes a backseat after promoter British Gas sells 9.3% stake in the block deal. Well, those were the top 5 headlines from the day's trading action. Hello and welcome to Markets Today Talkback, the show where we tell you all about all the 8 hours of trading action in the markets in just 5 headlines. I'm Lata Venkatesh, and with me, Prashant Nair, my colleague. Hi, Prashant.
Lata, hi. And we promised to wrap up the day's trading activity in basically the 5 stories that we always do. And we'll get to that in just a bit. To answer the questions that you send our way every day, we have Geojit Financial's Gaurang Shah. We also have technical expert Ashwini Gujral on the charts. Gentlemen, thanks very much for being with us here on the show. But before we come to the both of you, let's quickly wrap up the day's events. It didn't look like the market had much of a chance despite the very strong close overnight, and we finally ended just about 12 points in the green, Lata.
Well, I'm not that disheartened because most of the global markets, Asian markets, had a mixed and ranged trading activity. Europe was for a large part in the red. So we just had, we kept company. This is important also because we had particularly a very big macroeconomic disadvantage in the sense of oil prices going over $70, actually trading at $71 for the better part of the last 24 hours. This is a particularly India negative news, not so negative for others. In spite of it, we performed in line with other emerging market and other markets. But the impact could be seen sectorally. You saw that it pushed down bond prices by a goodish bit, by almost a rupee. It pushed down bank stocks. And of course, it's pushed down oil marketing companies on almost an acceptance by a government spokesman that, yes, oil companies may not be allowed to pass on the crude price hike in the form of higher product prices. But in spite of this macroeconomic headwind, you will have to say the markets did reasonably well closing in on the 10,400 mark. It's just that the 10,400 resistance level is reasserting itself. Stock-wise, anything else?
So in terms of strength, there was metal stocks which actually ended the day higher. Auto was up, pharma was up. So, I mean, a bunch of things which actually did quite okay as well. Weak spots, PSU banks, energy, I mean, oil marketing companies to blame, and real estate, which did very well yesterday, day before yesterday, had a bit of a weakish day. So stocks, it's essentially TCA's HCL from the IT pack, Sun Pharma, Aurobindo from Pharma, Vedanta, Hindalco from the metals space. And then you had names like iShares and Reliance Industries, which found their way as some of the top gainers, I mean, between 1–1.5%. Big sell-off, HP, IOC, BPCL. I mean, at one point, it looked like there was some buying coming in. This was mid-afternoon, but nothing really by close. Large cap stocks which were lower, so SBI, Yes Bank, ICICI Bank, which had a decent day yesterday, came back. Actually, ICICI Bank came up from about 260 levels to about 290. It's given back some today. Adani Ports, another big gainer yesterday, was also lower. Broader markets, so IRB had a big blowout day. It's also, by the way, crossed some important technical levels, and we can maybe put the stock to Ashwini. Shakti Pumps, 14.5%. It's held by some institutional investors. United Spirits, I mean, consumption names have been doing very well, and there were other liquor names which did well, but United Spirits, the leader, 3.25 higher. Bandhan Bank, recent listing, 533, about 3%. Tata Sponge, there was Spark, GNA Axles, Supreme Industries, KEI has done phenomenally, and the Future Group stocks. There was Future Retail, which was amongst the big gainers. Broader market losers, Mahanagar Gas, PNB lost. You had Chennai Petro and MRPL, again the oil place, standalone refineries is here, Goa Carbon and something like a VA Tech Wabag, which also sold off. So essentially, market breadth not looking very good. Declines, overwhelming advances today. Lata.
Oh, yes, 3:2 decliners to advancers. But nevertheless, I thought despite a fairly big macroeconomic headwind, the markets held out the 10,400 mark, at least the Nifty did. Let's get to Ashwini to ask if, you know, this resistance or this ability to withstand the bad news is to be considered positive. Ashwini, your thoughts? Should one continue to believe that bulls will be able to pole vault over 10,425 thereabouts?
First of all, I don't know why 71 is a big negative. I have seen 140 in 2008. In 2008, we were at 71. So what's the big deal? I think maybe bond yield was the bigger deal. I don't think crude, you know, $3 or $4 or $5 higher also will make that much of a difference. And as we saw by the end of trade, NBFC started moving up. The bank started to recover. So basically market is range bound between 10,350, 450, and it's got enough legs today. IT came back, metals have come back. So my sense is at some point we'll cross 10,450, and sometimes, you know, a higher crude price is often a positive for equity markets. So let's see if that plays out. But I don't think worrying about $1 here and $1 there is that much of a big deal.
No, well, probably that's how the markets will interpret it. But it's just that the bonds fell because crude went up. Inflation fears yet again. And there is always the fiscal deficit fear as well. So at the moment, at least, that's playing out. But as you say, things may be very different if the bulls take charge. The second headline of the day?
Oh, absolutely. So a stern warning coming in to curb crude supply from the Saudi petroleum minister, as oil is on the boil once again. Brent crude oil prices hit 4-year highs as the US and its allies threatened Syria with airstrikes after an alleged chemical attack by the Assad regime. Let's listen in.
When oil approached $150 in 2007, Saudi Arabia was extremely concerned at that time, and we called for a major conference in Jeddah, Saudi Arabia, to try to cool the markets down and arrest that escalation. We will not sit by and let another glut resurface.
There is a healthy growth in the market in terms of demand. We have seen, if you look at the IEA or the EIA, in terms of the demand growth for the last 3 years, you're looking at between 1.5 and 1.6 million barrels. So you need between 3 to 5 million barrels per day of additional capacity to offset the decline and meet the additional demand. What we are seeing in the market that there is not enough capital being injected by the companies to meet the additional supply requirement in the demand requirement in the future.
That's Saudi Aramco saying that there is reasons to be bullish on oil because not enough supplies have been created. He may be interested party. So let's get you a disinterested party, if you please. David Lennox, the analyst at Fat Profits, also says that he expects a definite increase in crude prices moving forward, even if there were no geopolitical problems.
We certainly think as we move towards the latter part of the northern summer that we will start to see the oil prices move higher. We will keep our Brent price at between $74 to $84 at the end of this year, and the WTI price at between $70 and $80. So you can see we're already expecting to see those prices increase.
Okay, we had trouble with oil marketing companies here in trade as well. Oil marketing companies, OMCs, IOC, HP, BP, got pummeled in trade today after the agencies and wires reported that the government is set to ask oil marketing companies to absorb about 1 rupee in retail selling price of petrol and diesel. Stocks were down very, very sharply in terms of trade today. I think Lata, I mean, this is a developing story, really. We don't know whether this is going to we're going to get a clarification, but it doesn't look like, looking at the previous episodes, that we're going to get a denial or a confirmation.
Yes, if the 1st of the month passes without a price hike, if the 15th of the month passes without a price hike, you know that there is no diktat, but people are falling in line without the diktat. So let's.
We actually spoke with we had HPCL actually on the record speaking with our reporter. So let's play that out. We also spoke with Narendra Taneja earlier in the day. So listen in.
Sir, there are reports that OMCs have been asked by the government to absorb 1 rupee per litre on both petrol and diesel.
We don't have any such input. I've seen some media reports coming up, and there were a lot of people who were asking. We don't have any input, at least to that extent. Second thing is the price not changing cannot be directly attributed to this. The pricing is a function of 15 days rolling price.
The petrol, diesel are decontrolled commodities, as you know, so the government can't really issue any instructions as such. But government being the biggest stakeholder in these companies, they can always have conversation on these lines so that the trust of the consumer, you know, who is the most important person, is maintained. We see prices moving only in one direction, that's up and up. So I think it's to win the confidence of the consumer at this stage without really, you know, upsetting any kind of the order which is in place. The government has asked the companies very clearly that they should, do their best in order to pass on the maximum possible benefit to the consumers.
Okay, well, maybe we should replace consumers with voters, and then you get a picture as to what exactly is happening politically to the oil companies. But there is a question on oil companies from a viewer. Pankaj Merchant has sent us this SMS. He says he has 406 shares of BPCL purchased at 536 rupees each. He says he's a long-term investor. Should he hold or sell? That's 406 shares at 536 rupees. Gaurang, your take.
Thank you, Lata, and good evening to all of you all. So I think let's give a disclosure first. We have a positive coverage on HP, BP, IOC, including Reliance Industries, because they are also into the retailing business of petroleum products. And I was just listening into a while back, Prashant did a detailed analysis of what has happened over the last couple of years. And it's rather sad because on one hand you talk about decontrolling, on the other end you say that so-called request has gone to bear 1 rupee per litre, absorb 1 rupee per litre price adjustment, whatever. So, I mean, and another thing is, still there is no clarity, Lata. If entire 1 rupee is going to be borne by the oil marketing companies, or it is going to be the upstream companies, etc., etc. And HPCL management on your channel has denied to receive any such request from the government side. So I don't see any reason why the stocks have to be down 4, 5, 6%. Longer term, we remain positive, and we are also of the view that this elevated crude oil prices are not going to stay there for a long time, and you are going to see some amount of move down south.
Okay, we've got one more question, and this is on IOC. Sridhar R is asking what to do with IOC. He's got 325 shares of the company. He's paid 193 rupees each for them. Long-term investor, should he hold or sell? Ashwini, this is coming your way. Your long-held view is the best was over for oil marketing company some time back. But what would you tell Sridhar?
Well, that's the reason I said so, because all the positives are over, and now the negative is that the reforms get tested as oil moves up. So my sense is these stocks are going to come off, and even here you could get 140, 150, because in this country, if oil prices are lower, everything is deregulated. If they go higher, then it's semi-deregulation. You don't want to get involved in that.
Okay. Well, with President Trump's tweets coming in thick and fast, I guess crude as well as global equities are going to have a tough time. But, well, it's a second tweet can make all the difference. So we won't bother too much about it. For the moment, we take a break and we are coming back. Our experts are still with us to answer all your questions.
Welcome back. You're with us here on Markets Today Talk Back. The market, of course, by close ending higher, but didn't really go anywhere. Tough conditions around the globe in the Asian trade and European trading as well. We've been running you through the top stories, and our guests, Gaurang Shah and Ashwini Gujral, have been answering the questions that you've been sending our way. We got through 3 stories. This is the 4th one. Bank stocks took a knock in today's trade. The Nifty Bank Index was over 0.5% in the red as bond yields surged, fueled by crude oil prices and the resultant inflation it could cause. The fall in banks was led by PNB, State Bank of India, and Yes Bank, which all fell over 2% each. How much of an impact, Lata, are we really talking about here?
Well, as it is, the public sector banks are not buying. There is no buying mood in the market. And therefore, when, after all, the rally on credit policy day was on expectations of a dovish indication towards inflation and interest rates. Now, if that apple cart is upset by higher crude prices, then you must expect bond yields to come back to the 7.5% mark. But this is a mix of both buying allergy on the part of the PSU banks and, of course, the crude numbers coming in. Just a word, there was a sovereign bond issue news that came in. It's just an old plan. The government dusts it up every time there is a danger to the fiscal deficit. But it's possible that it's only on the table and never used because there is serious resistance to it from the Reserve Bank. And in any case, we are not in a situation where we are in such a dire need for dollars. And perhaps, therefore, it'll pass. The bond yields dipped from 7.46 to 7.36 just for an instant when the news came. And then they again came back to 7.46 simply because no one believes this bond will be issued anytime soon. Well, with that, let's get to questions.
We've got Twitter user Velingari, who's got, and this is interesting, he sold 10,000 shares of Federal Bank at 118 rupees a share. We don't know what he bought it at, but he's, of course, now looking at Federal Bank under 100 rupees. Today closed at about 97.98. He wants to know whether this is a good price to re-enter or maybe he should look at other stocks in that space. Ashwini, what would you tell him?
See, if he's a long-term investor, then maybe Federal Bank is good. But it's not really the kind of compounder that, people used to say it will become. If it's a short term, 3 months, 6 months, then you have to buy banks which are at new highs, Kotak, IndusInd, HDFC. If it's long term and, he can keep a stop of about 88, 90, then maybe it can get up to the upper end of its range, maybe 120, 125. But overall, I like to be in stocks which are making new highs. That just means that they are attracting more buying than stuff that is way away from previous highs.
Okay, Mr. Velingiri, that's the advice for you. Would prefer a Kotak Bank to Federal. That's the advice. Another bank question coming in from a viewer named Kannan. He has 100 shares of Yes Bank, purchased at 317 rupees, says he's a medium-term investor. I wonder what's that term. Should he hold or sell? First, you, Gaurang, you think Yes Bank is worth holding if purchased at 317?
Well, yes, Lata, and if the time horizon is maybe about a year and a half plus, then I would definitely recommend. And we saw Yes Bank correcting sub 300 levels very recently and has pulled back. And not to forget, last 2 quarters were disappointing, but we expect visible improvement for this quarter and the coming financial year, this financial year that is. So if you are a long term, stay invested, and one can initiate a fresh buy also.
Okay, so that is Federal Bank and Yes Bank. Questions answered. The final and the fifth headline of the day. The stocks in focus today. Fortis Healthcare traded with over 0.5% gains after Manipal sweetened the offer for Fortis hospitals by increasing the valuation by 21%. We had IRB Infrastructure, which was up over 10% today, and it was higher for the second straight day. The stock has gained around 25% this month so far. And lastly, Mahanagar Gas took a backseat in trade as the stock fell over 3% after the promoter British Gas sold 9.3% stake via a block deal.
Okay, a caller has joined us from Ahmedabad, Chris D'Souza. Question on Mahanagar Gas, I believe. Mr. D'Souza, your question?
I was just wondering why, should I hold this or should I take it off?
Okay. 235 shares of Mahanagar Gas. Ashwini?
See, the way it's acting, I don't think it's very positive. If you want to be in gas, maybe IGL is a better choice. MGL is in a downtrend and chances are it could possibly go even lower.
Okay. Well, Mr. D'Souza, that's the word for you. It can go lower, so it looks like getting out is a better idea. Ashwini, okay, Gaurang, what do you make of the rally in IRB Infra? Would you want to buy it?
Well, not really, Lata, and in fact, it has been a little bit volatile stock and has been in news for some wrong reason also. And if you want to play the infra, we are positive on KNR Construction, PNC Infra, and the theme that the government is also following in terms of road building. We believe these two companies are best suited for long-term investors.
Okay, but still it's a
yeah, it took rally. Out. Actually, maybe we should put this to Ashwini. Ashwini, IRB. I mean, it's at a critical juncture. It's taken out some. I mean, almost taking out the previous highs. Any thoughts?
The problem is that it's not been able to cross, say, about 300, 310 for a long time, and it's not a compounder. Every few months it tends to fall to 180 to 200. So to buy it at almost the previous high is not the best trade really, when you have many other stocks which are trading at all-time high, Jubilant, Titan, etc. This is that kind of stock where at the highs there will be bad news and it will come hurtling down. I don't think it's a great stock for a retail kind of investor.
All right. So those of you who find the 25% rise this month and the 10% rise today mouth-watering, here's the caution coming in from our experts. Gaurang and Ashwini, thank you very much for joining us and answering questions of our viewers. With that, we wind up this edition of Markets Today Talk Back. Thanks for watching.